Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm joined today with Eric Hadik of InsideTrack.com. He's someone who's been on the show a number of times. We'll have the link in the description area. Inside with two I's, INSIIDE. We'll have the link again in the description area. He's been on the show a number of times. We've discussed precious metals. He's discussed the timing. And he's really given us a lot of insight on when gold is expected to move. And here we are, gold over $1,400. It's pulled back a little bit in the last little while here, but still materially higher than we've seen it. June has been a very spectacular month for gold. It wasn't that long ago. We were at, $1,275. Now we were, pretty close to, $1,430, a little over that. Moving down a little bit now. I want to talk about that. I want to talk about silver. Silver really not keeping up with gold, with how fast gold's moving. So what does that mean? Why is gold moving like that? And what does it suggest about possibly an investment in silver? All of these things today with Eric. Eric, thanks for coming on Crush the Street with me.
Oh, thanks for having me back, Kenneth.
Well, so let's talk about gold. What are we seeing right now? Why are we seeing this move in gold? Obviously, a lot of things could be at play here. I know you do a lot of cycle analysis. Is it a cyclical move? Is it, because of potential war with Iran? The monetary system, interest rates? What's going on here?
Well, I would contend that it's all cyclical moves, but there's a lot more than that too. I use cycles as my backdrop to give me some real timing indications, but there's a lot of other indicators and then obviously fundamentals that drive the market. But I think that one of the things that we're seeing in gold is just a slow, I wouldn't even call it deterioration, but with the dollar, where the dollar really, for all intents and purposes, peaked or set a secondary peak last November, December. Dollar index got up around 98, and it has gone back up and retested that level several times in March, April, May, but each time failing to break through that. And while that was happening, gold was building a nice base, bottomed in August of last year, kind of saw a secondary low in November, same time silver was bottoming. And it's been when the dollar shows some vulnerability that all of a sudden you get these spikes in gold. It's showing to me that there certainly is some underlying buying pressure, but that pressure is kept under wraps when the dollar is still maintaining some strength. But as soon as you remove that from the equation and show any signs of weakness in the dollar, that gives these real quick spurts in gold, where it's been a stair-step thing in gold really since the late 2015 bottom. And once again, you saw in late May, the dollar gave an initial 1 to 2 month sell signal, and then and gold started to recover at that point. But it was really when the dollar kind of set a rebound high in the middle of June and started to turn down. My work said it should drop into early July. And that was when you get this window of opportunity where all of a sudden gold really accomplishes 3 months worth of upside work in a matter of days. And I think that pattern is what you're going to see continue throughout the year.
Yeah, no, that's powerful. And we are definitely seeing, a real, I guess, installation of optimism in the precious metals market. Now, watching it go over 1,400, this looks like a pullback, right? And I think people are optimistic that we're going higher here, which was different than, let's say we were at 1,300 and then watching it fall back below the $1,300 range. It was still psychologically devastating to people. Like, hey, we're still in just these doldrums of flatlining and not really much action happening. But this feels different, right? We're over $1,400, so the pullback we're seeing is, I think feels like a buying opportunity for a lot of people, even though nominally, buying at 1275 is a lot better than buying at 1400. So what are your thoughts on that?
Well, that's kind of a couple thoughts there. One, you just mentioned that 1270, 1275 area. That really was key support for me in late February. I put out a special report on gold and silver. In fact, I'd be happy to send free copies to any of your listeners. But at the time, it was showing that gold was entering one of the two main cycle peaks that I expected for the year. The first one was late February, early March, and the second one was late June, early July, where we're at now. And when it hit that peak, my target to the downside was 1270. I explained why gold needed to get back down to the 1270, 1280 level, why long positions from August and September should take some profits there near the highs and wait for a pullback to 1270 to get back into long positions. So technically, the fact that gold adhered so closely to that really reinforced my outlook for 2019 and 2020. And that gave gold the opportunity to build a higher floor and above that 1150 where it bottomed in late 28 or in third quarter of 2018, and that gives it kind of that strength, that opportunity to now mount a new rally, break through the old highs around 1370. And I agree with you that this breakout is certainly more of a positive development. I still think we're going to see probably a 1 to 2 month peak set in this time frame, perhaps stretching into the first week or so of July, and that then we'll probably see, as we've seen so frequently, a couple months of consolidation, but at a higher plateau, where perhaps gold trades between 1450 and that breakout point around 1370. A lot of times when you get a resistance level that is held so long like that, and if you recall the initial rally from late 2015 into July of 2016 peaked around 1375. Then when gold had another run up into September of 2017, it was around 1360. Early 2018, it bounced up against the 1365, 1370 level. So that repeatedly, probably like 1365 to 1375 was such a key level that when you break out above a level like that, a market will see some initial follow through to higher levels. And then it enters a period of consolidation and comes back and usually retests that level. It's kind of a test of strength, saying, okay, is this really a key level, a key swing point in gold, and will it attract new buying? Which I would contend that it will when that happens. But on a higher level, that's a little bit what we saw at 1270. When I was expecting that pullback to 1270, it was because gold needed to do one of these tests of strength, build some new momentum, and then be ready for a more sustained advance. I think you're going to see the same thing on this higher magnitude where this breakout is, it's now got gold at new 5-year highs. And so you get some initial follow through, but then a pullback to that 1365, 1375 level before it really enters the next leg up.
Eric, so what's going on with silver then? I mean, we're hitting, 93 on the gold silver ratio, some levels we really haven't seen since the early 90s. Why hasn't silver kept up with gold? Why? I mean, is it a psychological thing? Is gold moving because more of a fear trade? Is it kind of like what happened in the crypto markets where Bitcoin moves and then a lot of the other ones just follow later on, and it's just maybe a nature of the way the markets work. You get the first movers and then, everything else plays catch up, which if that's the case, it would suggest a lot of opportunity right now in the silver trade.
I think it's even more than that. I think that you really need to understand the different properties, the different characteristics of each, and that silver is more of an inflationary hedge. When we see price inflation coming into the market, when you see kind of a tide that's lifting all boats in commodities, that's usually when silver benefits the most. In contrast, gold will benefit from that, but it also benefits from this monetary and even currency related stressors like I was just talking about with the dollar. And so the dollar, its perceived weakness, and I use that term with some air quotes around it, it really hasn't shown a lot of weakness, but it has shown an inability to follow through to the upside. That has given that window of opportunity to gold. But it hasn't been such a significant sign of weakness in the dollar that you would get an inflationary reaction across the board. And I think that a lot of times gold and silver traders are still kind of in the mindset of the 70s or 80s, and the distinction has become more stark and more very intentional between gold and silver, and that gold benefits when you see some concern about fiat currency as a whole, but mostly the dollar, since the dollar is really the one leading that area of the currency market. And you get gold benefiting, and now, in recent years, you've got Bitcoin and crypto also starting to wrestle with gold for some of that anti-dollar moniker. And silver is not near the same as that. And so I think silver needs to see more of an inflationary environment before it's going to really benefit. And that would probably take more of a sell-off in the dollar, triggering some of that inflationary type of reaction before you'll really see silver have any major move up.
Yeah. Well, that is obviously interesting. I mean, I'm very spring-loaded when it comes to both gold and silver, but I've always thought that, when we do have that move in gold, I mean, even that move from $15 to its all-time high, I mean, we're talking about a 200x return. I mean, it'll be pretty spectacular when we do start to see silver move higher like that. I mean, a lot of people calling silver, $600 an ounce. That's the true intrinsic value based on different metrics, monetary and whatnot, which I won't argue with. So, any thoughts on where you see your cycles taking gold and silver here going forward into 2019, 2020?
Yeah, when you talk about it from a cyclic perspective, probably one of the more comprehensive reports I did was last September, and I was kind of laying out the 2-year or so outlook for both precious metals and mining stocks. And at the time, I explained why August, September of 2018 was the time for a major bottom in gold and in the XAU index. Here again, silver, it took until November to finally bottom out, and it's always lagging that arena. And I laid out these cycles looking forward, kind of the monthly, bigger scale cycles where you would get 3 to 6 month peaks and lows. And my outlook was, I already alluded to some of it, was that in the first half of 2019, we would see an initial surge into late February, early March, a pullback into April, and then another surge into June, July. And actually the mining stocks, the XAU index, could stretch that into August. and you usually have each of those sectors topping and bottoming at different times, even though the general trend is similar. But that would be part and parcel of a larger overall advance. And I laid out, particularly in the XAU index, why I saw that moving progressively higher into late 2019, early 2020. And that also dovetails with my outlook for gold. But again, I think it's going to be in this stair-step fashion where you get the lion's share of your move happening it usually happens in the final 10 to 20% of each cycle. So when I was looking at these weekly cycles going from August into late February, early March, some of the biggest acceleration came in the final weeks of that. And then this latest phase from April into late June, early July, and gold surges, sees the majority of its move in the final week or two of that cycle. That is very indicative of how gold and silver trades. I call it the 90-10 rule of cycles, where often upwards to 90% of the move happens in the latter 10% of the cycle. Sometimes it's more of an 80-20, but the general principle is the same, that you get this more parabolic move in metals where all the buying comes in at once. It usually breaks through some key level. Everyone piles on and then realizes that the pendulum swung a little too far this time. And then there's the pullback and the consolidation. So I think that's the pattern that you're going to see gold and silver and mining stocks unfold from now into, actually, I'm sorry, I said late 2019, early 2020. It was actually late 2020 is where I saw the ultimate peak happening in the gold silver index. So I think that we are still evolving in an uptrend, but if you look at the bigger picture, like in gold, and the wave structure that it has shown even since its 2011 peak, that it is still confined by a very wide trading range there. And it's going to struggle to take out its old highs, its 2011 highs, even during that whole bull market.
So let's talk about the miners then for a second here. And I think it goes on to show the lack of confidence that the sector has because of the extended bear market that we've seen. I know, everyone will correct me and say, oh, well, we bottomed actually in December of 2015, but really, we've only seen these quick spikes up over 1,300 for it to fall back down pretty low again. And we have seen those higher highs. But I think because of the nature of the trading, people get in when it goes higher, and then they find themselves down once again for longer periods of time than they are actually up. Obviously not those who've been in it for years and years and years. But I think the average retail investor gets in at 1350 and watch their account, watch their metal go below 1300, right? So anyways, when we saw gold go over $1,400, the mining stocks were not where they were the last time gold hit 1390 in 2016 or something like that.
Right.
There was quicker optimism to enter the mining space, whereas this time it's taking a little more time for, I think, people to get confident about it. So what are your thoughts on this?
Well, I think that's just the reality of any commodity versus commodity stock dichotomy or relationship. And I think that a lot of times gold bugs kind of lose sight of that, get a little too frothy over a quick move up in the metal. If you were a mining operation and you've been struggling to make ends meet for months, years, whatever, just because that commodity, it would be kind of like a farmer, just because the price of corn ran up a buck over a couple week period Does that mean you're suddenly going to change your entire production for that year and the years to come, and change what you risk and what you invest in because of a quick spike like that? And you're not going to. It's more like, turning an aircraft carrier around. First there's the hitting the brakes, then there's the slow, or reversing the thrust, I should say. And it takes time for not only for that to reverse, but gold needs to show. It had its initial rally in 2016. Gold stocks, percentage-wise, had a much better rally than gold. I mean, really, the gold silver index went from 40 up to above 110 in that 2016 run-up. Well, that was overdone. And so until gold stays above this 1370, 1380 level for a couple months, I think you're not going to get the mining shares really get too much on board, because they've been there, done that, seen that before. That gold has its spikes up, and then 3 months later, 6 months later, it's back down. And so a stock has far more things factoring into its valuation than just the underlying commodity, in this case, the metal. And again, I think that so many traders just don't even think about that. They just think, oh, well, gold goes up, so gold stocks have to go up. And that's not the case. And again, the value of gold and the percentage it moved might just be a blip on the radar of that overall stock valuation. And so you can't expect it to move in sync with that. When you get a more sustained move in gold and an unmistakable uptrend, then you'll see, the gold stocks really catching up and getting on fire. But until then, you're going to see this trepidation with gold shares, where they'll respond. And even in 2018, it took about a month more till they bottomed. Gold bottomed in August, the XAU in September, and when the initial rallies in gold took hold, it took longer for the mining shares to believe it and to start to buy into it. I think that the longer gold holds above this 1380 level, even if gold's going sideways, you might see the mining shares slowly pick up some upside momentum. And that kind of fits with the cycle outlook I was just describing, where XAU cycles could wait until August to finally set a peak for the year, whereas the actual metal, gold, is more likely to peak in July, possibly early July, for at least a couple months. So it's not a case of just a clearly defined up move in gold, but rather where it holds and how long it's able to reinforce the new strength that it's shown, that then you'll get the shares buying into that optimism, but doing it on a scaled in basis.
Eric, a lot of people looked at the 1361 level as, support resistance. We broke through that pretty significantly. And a lot of people are now looking at 1550 range as the next resistance level that needs to be broken, and are suggesting that it's off to all-time highs, 1900 basically. Beyond that, what is do those numbers line up with kind of your analysis, 1550 and then 1900?
My outlook coming into 2019 was that my primary upside price target for gold was there was a range that stretched up to 1445, and so that was my key level. If we give a weekly and a monthly close above that, then that's a pretty powerful signal for my work. But in the meantime, that's where I expected to see this June-July peak take hold. I do have some intervening resistance right around 15 and a quarter. And really, that's more than anything, that's a level that was the initial support off of the 2011 highs. When we hit that 1900 level, the first sell-off took gold down to around 1530. Then it rebounded sharply back up to about 1800. Then it went back down to 15 and a quarter, back up to 1800, back down to 15 and a quarter. It didn't break below that level until April of 2013. So that what was a major support point around 15 and a quarter now becomes a very significant resistance level on a 1 to 2 year basis with gold, and so that would be the other key level I'm watching. And then, as you said, yes, the highs up there just above 1900 would be the final objective if and when we break through these two resistance levels.
Right. All right, Eric. If people want to learn more about your work, your analysis, and really, understanding where the price of gold and silver and how to play it going forward here, tell them about your work and, where they can find it and, what they can expect to get from you.
Well, you can find samples of our work, plenty of archived reports at InsideTrackTrading.com. We did have InsideTrack.com was the original URL, but for SEO purposes and other purposes, we decided to shift that to Inside Track Trading. But we still have Inside Track, which will redirect to Inside Track Trading. So bottom line is you can use either one to get to the same site. But you can go there and see many samples of our work, as I said, dozens of archived reports that give some of the longer term viewpoints. But you can also contact us through the website. And like I said, I'd be happy to send some free copies of those prior gold reports and also some very current ones that I've put out and described what I'm looking for in the coming weeks and months. There's also been some related articles that I've done on Bitcoin and cryptocurrency, which kind of dovetail with the outlook for gold here too. And I'd be happy to send some of that as well. So that would be really the best way to get a good overview of our work. I also archive a lot of my 40-year cycle related work, and that's a topic that we didn't really get into, but one of the primary things I see with that 40-year cycle is currency wars, and I think that's really the underlying thing of what we're seeing here between fiat currency, hard currency, and now digital currency. But you can also find a lot of analysis and free reports at 40yearcycle.com. That's the number 40yearcycle.com. So they're the two best places to locate our work and to get hold of us and request some of those free reports.
All right, Eric. Eric Hadik, everybody. Eric, thanks for coming on Crush the Street. Your time here is very valuable to us, and we greatly appreciate it. So thanks so much for coming on the show.
Thanks for having me back, Ken. It's my pleasure.